Hey everyone, welcome back to Corporate Decoded, the place where we help you make sense of the confusing world of business filings and maybe even find a company to keep your money safe. Today we're diving into Xcel Brands report, and boy do they have some news that will make you rethink your wardrobe, or at least your understanding of how companies report their progress. So what's the big deal with this filing? It seems like Xcel Brands is reporting their financial results for the quarter that ended back in June of 2025. Now, companies usually do this to keep investors in the loop about how they're doing financially, but what's really interesting here is how they're reporting it. This filing tells us that on August 14, 2025, Xcel Brands put out a press release with their earnings for the quarter ending June 30, 2025. This is pretty standard stuff, but here's where it gets a bit tricky. They've included some financial numbers that aren't exactly following the usual US accounting rules. These are called as the official rulebook for how businesses should report their money. Non-GAAP measures are like a special addendum or a different way of looking at the numbers, and companies use them to highlight certain aspects of their performance that they think are more important or tell a clearer story. Xcel Brands is telling us they have explained why they're using these alternate measures and how they relate back to the official GAAP numbers. While the report has a lot of important details to share, it also gives out information like the company's main phone number. Now, this number is usually for people who need to contact the company directly for business matters. Let's talk about what Xcel Brands actually does. This filing indicates they have common stock registered, and this stock is traded on the Nasdaq Global Select Market under the ticker symbol XELB. This is important because it tells us that regular people like you and me can buy and sell shares of this company on a major stock exchange. Now, the main event here is this press release they put out. It's where they laid out their financial story for the quarter. They're essentially saying, here's how we did, and here's a specific way we want you to look at it. It's like showing a picture, but pointing out only the parts they want you to focus on. And who's signing off on all this important financial news? Well, it's the Chief Financial Officer, James F. Harron. He's the one giving the official nod, saying these numbers are accurate and presented according to their best understanding. Alright, so this report is essentially a heads up that Xcel Brands released their quarterly earnings. They are choosing to present some of their financial figures using methods that aren't strictly the standard US accounting rules, the GAAP. They're also providing explanations for why they're doing this and how these non-GAAP numbers line up with the official US GAAP ones. It's a common practice for companies wanting to put a specific spin on their performance, often to highlight growth or profitability in a way they think investors will appreciate more. For us as investors, it means we need to be extra careful to look at both the standard numbers and the ones they're emphasizing to get the full picture. Always remember to consider these non-GAAP measures in addition to, and not instead of, the standard US GAAP measures when you're trying to understand a company's true financial health. Now, looking at the broader picture here, Xcel Brands is a company that's playing in the retail space, specifically focusing on apparel and lifestyle brands. They operate through various online and brick and mortar channels. The key thing to watch with companies like this is how they manage inventory, adapt to changing consumer tastes, and compete in a crowded market. Their success hinges on having brands that resonate with customers and efficient operations to get those products to market. What I find interesting about their approach is the emphasis on these non-GAAP measures. While it's perfectly legal and common, it signals they might want to draw attention to certain aspects of their business that look particularly good when viewed through their preferred lens. This could be due to factors like one-time expenses that they believe distort the true operational performance. For instance, if they had a large restructuring charge, excluding that would make their ongoing business look more profitable quarter, or they might be showing adjusted earnings that remove the impact of costs related to acquiring or integrating other brands, which can be a significant part of their growth strategy. The fact that they are listing their common stock on Nasdaq as XLB means they are a publicly traded company and subject to regular reporting and scrutiny. This is good for transparency. However, the retail sector, especially fashion and apparel, can be very volatile. Consumer spending habits can change rapidly, and companies need to be agile to stay relevant. Competitors are always launching new products, and keeping up with trends is essential. When we look at a company like Xcel Brands, it's important to ask ourselves what the underlying story is. Are they truly growing and performing well, or are they just presenting the numbers in a way that makes them look better than they are? These non-GAAP adjustments, while sometimes helpful, can also be a way to mask underlying weaknesses. What I would be looking for in their actual financial tables, which are part of this filing but not detailed here, would be revenue growth, of course, but also their gross profit margin and how they are managing their operating expenses. Are they efficiently converting sales into profits, or are costs eating away at their earnings? If they're reporting, say, a 10% increase in revenue, but their costs have gone up by 15%, then the overall picture isn't as rosy as the revenue number might suggest. A company that consistently manages its expenses well and maintains healthy profit margins is usually a sign of a well-run business. Another critical area for a company like Xcel Brands is inventory management. Retailers that are too slow to move inventory can end up with a lot of old stock that they have to sell at a deep discount, which hurts their profits. Or they might be carrying too much inventory, which ties up cash that could be used for other productive purposes. I'd want to see their inventory turnover ratio to understand how quickly they are selling their goods. So to sum it up, Xcel Brands is reporting their earnings with a specific presentation method favoring non-GAAP figures. This means we, as diligent followers of corporate finance, need to check those figures carefully against the standard GAAP reporting to form our own unbiased opinion. The retail environment is tough, and agility and brand strength are paramount. They are listed on Nasdaq, which is a positive for transparency, but the actual financial details hidden within the press release will tell us if their performance is truly keeping pace with the market. What's your take on this strategy of using non-GAAP measures? Do you think it helps or hinders transparency? Let me know in the comments below. If you found this breakdown useful, please give it a thumbs up and consider subscribing for more in-depth corporate analysis. And don't forget to join our Discord community for even more discussions and insights. Thanks for tuning in, and remember to always dig deeper